Another big earnings report to watch is Tesla. The company is set to release its financial results after the close on Wednesday, and we'll see whether Elon Musk's aggressive price cuts are hitting Tesla's profit margins.
We're seeing more price cuts from Tesla. We've already seen them in China and the U.S., their two largest markets. Now we are seeing them in other parts of the world. According to Reuters, they have decided to cut prices on the Model 3 and the Model Y in Europe. Germany in particular, 4.5 to 8% cut in the prices there. Singapore, a cut of between 4.3 and 5%.
Big week ahead for Tesla nerds and Elon D riders, with the Starship launch expected to attempt to maybe possibly try to get to orbit and or abort on the launch pad and or blow up and destroy the entire launch pad. That's happening tomorrow or today or already happened by the time you see this. And on the 19th of April, Tesla reports earnings after the bell. Many investors are curious, how will Tesla's recent price cuts impact earnings? My guess is not as much as most are expecting, but it certainly will have some impact. I mean, If we pay close attention, we may gain some insights, because Tesla, at the same time they've been reducing prices, has also been driving their cost to produce vehicles down. Many people with SBS seem to think that Tesla's cost to produce vehicles hasn't changed at all, while their prices have come down, and they're massively overestimating how low margins will be. But we don't really know how much Tesla's cost to produce vehicles has fallen, so it's going to be very, very telling. Big price cuts. How much will these big price cuts impact margins? Well, that'll be down to the difference between the price cuts and how much Tesla was able to drive costs down. By the way, guys, I did post a follow-up video to the most important video I've ever posted exclusively on Patreon. Again, I can't post that on YouTube. I wish I could. But unfortunately, the censorship overlords have me by the testicles, and I don't like it. I would tell YouTube to go f*** themselves, but they might squeeze my nuts a bit tighter and that'll hurt. So I won't say go f*** yourself, YouTube, and instead I'll just say, if you'd like to see that content, you'll have to head over to Patreon. If you're not a member, you can join with the card in the corner or the link in the pinned comment. So, time to talk Tesla price cuts and Tesla earnings. We'll be featuring some clips from the mainstream finance media. But first, we're over on the Doomberg website. Tesla goes after America's top-selling SUVs. Elon Musk's price war means the Model Y can now be purchased for less than the average new vehicle in the United States. Let that sink in. No, really, let that sink in. A Model Y can now be purchased for less than the average new vehicle purchase price in the United States. This is what's known as a tipping point. It doesn't mean that everyone can afford to purchase a Model Y, far from it. But now that a compelling electric vehicle can be purchased for less than the average new vehicle price in its category in the United States, boy oh boy, shit just got real. Let's read on. This much is clear from Tesla's fifth price cut this year. Elon Musk is dead set on seizing much more of America's SUV market. No shit, Sherlock. Just between you and I think in order for Tesla to sell 20 million vehicles a year in 2030, they will be selling quite a few SUVs in the United States and elsewhere. While this is true, it's kind of obvious. They've been telling us they're going to do this, and they are currently doing what they said they were going to do. Tesla's Model Y already became one of the 3 best-selling sports utility vehicles in the United States last year. That was remarkable considering the starting price of the Model Y was more than double the Toyota RAV4 and the Honda CR-V, the market's perennial favourites. Now this is fair, and it's important, and something a lot of folks just don't quite get. The Tesla stretch. There are people today who've never paid even close to as much as they've paid for a Tesla vehicle, ever, when purchasing a previous ICE vehicle. Not even close. People who've never paid more than $15,000, $20,000, maybe $25,000, $30,000 at most for a new vehicle. Look at a Tesla and they're thinking, 45, 50, 55? That's a lot of f***ing money, but what do I get for that money? Oh, that's what I get. I think I can make this happen. I've been discussing the Tesla stretch from day one on this channel. A lot of people in the comments sharing very similar stories. A lot of tight asses, including myself. Never even considered spending more than a very small, minimal amount to get a vehicle that will just do the job. But then when you look at what Tesla's got on offer, the value, the safety, the performance, the features, the total cost of ownership and operation, the over-the-air updates, it's a very, very compelling, extremely valuable product. And just in case you haven't figured it out yet, when Tesla releases their next-gen vehicle, give or take maybe $25,000, $30,000, it's going to have the features of a vehicle probably twice its price. The competition at that point in time is really, completely and utterly f***ed. Tesla will be offering a premium vehicle at an affordable price, something no other automotive company has or will viably be able to do. Of course, the reason that Tesla can do this and no one else, Tesla's continue to drive their costs down to produce compelling electric vehicles. There's no one in sight. And we saw this at Investor Day 2023. They've literally got a plan, a new manufacturing process, new factory design, a few adjustments that will literally halve the cost for them to produce a compelling vehicle. Halve the cost. Meanwhile, all of Tesla's so-called competition, whether we're talking about ICE or electric vehicles, is nowhere near this point. No one can offer comparable performance, comparable value for even close to the same price, unless they're willing to sustain multi-5-figure losses on every vehicle sold. something people still aren't getting, which is why I'm discussing it in great detail. Now, that cost barrier has been reduced to a speed bump. Since January, Tesla has lowered its Model Y starting price by 24%, the biggest drop of any of its vehicles. On top of that, the Model Y became eligible for the $7,500 federal tax credits for the first time. Taking that into account, an all-wheel drive Tesla SUV with 279 miles of range can now be had for 10% less than the average price of a new vehicle sold in the United States. And just a quick note on this, entry-level Model Y, 279 miles of range, 10% less. However, if we go to the Tesla website now, just for context, the entry-level Model Y, 279 miles of range, $3,000 more, you get 330 miles of range. Translation, the long-range Model Y with 330 miles of range is still cheaper than the average new vehicle in the United States. And a 330-mile range Model Y will suit almost everyone's needs. Bloomberg has been tracking what Tesla charges for its models relative to the industry average since the beginning of this year. Read on for 4 storylines that have emerged from the company's latest cuts. The Model Y drop is transformative. A 24% price decline in 3 months is practically unheard of for such a high volume vehicle. The closest analog may be the Model T, which Ford made dramatically cheaper in the 1920s by way of the moving assembly line. It's important to take a moment to discuss this because bears will immediately assume 24%, oh my god, no demand. People who understand Tesla's mission, the thing that they posted publicly, 17 years ago, their secret master plan, which was anything but secret, they're doing what they said they were going to do. Drive costs down, passed on cost savings, more people can afford to buy our vehicles, more people buy our vehicles, mission accomplished. The reason for the 24% price declines is a combination of Tesla's hand being forced and them to embarrassingly increase the prices on their Model Y over and over and over. Tesla did not want to increase the price on the Model Y, but they needed to do so as they were ramping up production because wait times were getting absolutely f***ing absurd. People ordering a Model Y, give or take a year ago, were going to be waiting 6 months, 9 months, even longer in some regions. That's absurd. Who wants to wait 6, 9, 12 months to take delivery of a vehicle they've ordered? So it's just important to paint the full picture here. Elon Musk himself described Tesla's prices as embarrassing as a result of those price increases eventually must come down. And what's enabled Tesla to bring these prices back down is an increase in production, meaning they can get through those orders quicker. In addition, as production's ramped up, Tesla continues to innovate in terms of manufacturing and drive costs down, delete parts, delete processes. The actual cost for Tesla to produce Model Ys has simultaneously been falling. There was a period there where the cost to produce these things was falling, but the prices had to go up because the wait times were absurd. Tough problem to have. You have to charge a shitload more money and make a shitload more money selling your vehicles because there's insane demand. But obviously, over the long term, Tesla's goal, per their mission, is to make electric vehicles affordable to the masses. Elon Musk's price war. How Tesla's top sellers have compared to the average new car in the United States. We can see the Model 3 and the Model Y. The horizontal line along the bottom here is the average new vehicle price in the United States. And just a quick note here, differential shows the price of each Tesla base model minus the average price paid for a new car in the United States. The specifics aren't particularly important. I just want to emphasize the trend overall. As Tesla's Model Y was released, this has enabled them to reduce the prices of Model 3 because more customers were opting to buy a Model Y, meaning the wait times for Model 3 weren't too ridiculous, therefore Tesla could pass on their cost savings, closer to 1-for-1. However, the Model Y, given how compelling it is and how popular SUVs are, according to Bloomberg's data here, upon launch, Model Y was about $10,300 more expensive than the average new vehicle in the United States. That was upon launch. Not long after, prices had to be increased. It was then $14,700 more expensive. Then there's a few price cuts, a few price increases, bump, bump, bump. Look at this. Got to a point in June 2022 where the base Model Y, not the performance, not the long range, the base Model Y was almost $20,000 more expensive than the average new vehicle price in the United States. Why? They couldn't make enough. Wait times got ridiculous. Hence, the prices went up. This was not what Tesla wanted. This was counter to their mission, but it was necessary. Their hand was forced by the market. But as Tesla continues to scale up production, get through their backlog, they now are able to, and have, massively reduced the cost. This is incredible, and there will be no end in sight. In my opinion, the entry-level Model Y and Model 3 price will continue to decline precipitously over time. And remember, a linear decrease in the price to purchase a vehicle creates an exponential increase in the number of people who can afford to buy that vehicle. There's not a 1-to-1 ratio. A simple way to think about this, if you want to do some homework, look at how many vehicles per year are sold on Earth under $10,000. Then double that to 20,000. Then double that to 40. Then 80. Then 160. Then 320. There's not a linear relationship. The Model Y now starts at $49,990 or $42,490 for those who qualify for the federal incentive. That's about $5,300 less than the average price paid for a new vehicle in the US during the month of March, according to Edmunds. Tesla's top models have never been cheaper. The bears will go, oh my god, there's no demand, oh my god, that's why. This is how a bear thinks or doesn't think. Prices go down, therefore must mean no demand. Again, I refer to Tesla's 17-year-old secret master plan. Given production continues to ramp up, Tesla's building factories all over the world, they're eking out more capacity at existing facilities. I suspect that this headline will be true in 95% of months, weeks, and quarters in the future, indefinitely. The base versions of the Model 3 and Y have never been cheaper relative to the average new vehicle selling price. The Model S and X were slightly less expensive on this basis in late 2020. I think they were clearing inventory before the refreshes. Could be wrong. Tesla's plummeting prices. The cheapest Model Y cost 24% less than it did in January. We can see in the table here, the Model Y, currently $49,990. In January this year, it was $65,990. Model X, currently $94,990. In January this year, $120,990. Model S, $84,990 presently. Previously, in January this year, just a few months ago, $104,990. The Model 3, currently $41,990, and its highest priced in April 2018, $49,000. The standard range Model 3 now starts at $41,990. It's eligible for a $3,750 federal tax credit as of April 18th, which would bring the price to $38,240 for eligible customers. I mean, what a bargain. That's considerably less than the BMW 3 Series, a model it's often measured up against, which starts around $44,000 before the extremely expensive options. Look out for refreshes. Tesla's constantly fluctuating prices are unique in the auto industry, and just want to take a moment here. Let's think about this. Why is this so? In a word, agility. Not only does Tesla have access to the best data, without a dealership network, Tesla can see order flow internationally everywhere. Their finger's constantly on the pulse, and they've developed AI to look at the data to dynamically flag things that are occurring. The reason that Tesla's pricing constantly fluctuates is because they are dynamically adjusting pricing based on demand and production. And every time prices go in one direction or the other, people lose their minds. If prices go down, there's no demand, it's the end of the world, you better sell your Tesla stock. If prices go up, Tesla sucks because they're just greedy, they're trying to make too much money on their extremely expensive vehicles only for rich people. They can't win. Although, as Bloomberg established earlier this year, they tend to track closely with the broader US market. The base Model 3, for example, rarely drifted far from the US average the last couple of years, while the Model S typically went for about twice as much. Tesla's prices aren't so premium anymore. Exactly. A lot of people still have this perception that Tesla is a luxury and or a premium automotive manufacturer. Tesla is an affordable mass-market automotive manufacturer who is still currently getting there. But make no mistake, Tesla's going for the mass market. Hence their goal of 20 million vehicles sold in a single year at the end of this decade. They're not going to be doing those at premium or luxury prices. These are the facts. 3 of Tesla's 4 cars are at record low prices compared to the average new vehicle sold in the United States. There's been a lot of volatility here, but we're starting to see prices trend down reasonably now as Tesla's ramped up production. Model S and X in green and black and below, the Model 3 in blue and grey, the Model Y. By the way, anyone want to guess what happens to the prices of the Model 3 and the Model Y when Tesla's next-gen vehicle comes out? They're going down even more. And as a result, Tesla unintentionally will be dictating terms of pricing in the automotive industry, not just EVs, but ICE vehicles as well. Who in their right mind, in a few years' time, will be willing to pay $10,000, $15,000 more for an inferior vehicle when they could buy a Tesla much cheaper and get a better product? No one in their right mind. Plenty of people who aren't in their right mind, but crazy people are going to do whatever the f*** they want. The only time prices veered as far from these trends as they have recently was in late 2020, just before Tesla redesigned the interiors of the Model S and X. Immediately following the release of the new versions, prices jumped. It's not clear whether that dynamic will repeat with the Model 3 and Y, which Reuters has reported will be refreshed later this year. The Model S and X refresh coincided with supply shortages that drove up prices industry-wide. As those disruptions have eased, so have prices. My best guess here, there may be minimal discounting on 3 and Y, but it's probably going to be meaningless because, unlike the S and X, which are very low volume vehicles, 3 and Y still have crazy demand. Oh, and rest assured, there are going to be some real fucking mad customers who buy a 3 or Y, take delivery, and then the next day Tesla announces they're now accepting orders for a refresh version. Always happens. Spoiler alert, if you want the best and cheapest Tesla, wait forever. It'll always be cheaper and better in the future than it is today. I guarantee you, no matter when you buy a Tesla, at some point in the future, there's going to be a better, more affordable version of the vehicle you bought with more features, and it'll be cheaper. If you want to make a moron of yourself, you can go protest outside a Tesla store, or you can say, well, I knew that was going to happen, but at least they continue to update my vehicle with software over the air. Question: bad news for other automakers? Analysts disagree on whether Tesla's price cuts are indicative of weakening demand. My fucking God. I gotta bite my tongue here. Analysts disagree on whether Tesla's price cuts are indicative of weakening demand or part of a long-term strategy to expand its addressable market while cutting costs. Anyone want to guess in the comments below which of these is the case? Is Tesla doing what they said they do 17 years ago and have been doing ever since? Or Out of absolutely nowhere is there suddenly a lack of demand for this extremely disruptive, highly compelling technology known as electric vehicles. I've got no idea. I certainly wouldn't trust Tesla that they're doing what they said they were going to do 17 years ago and have been doing ever since, because that'd be too simple. And I'm an idiot, so I prefer complexity. Regardless, the markdowns are putting pressure on other car makers that already were having issues making money from manufacturing electric vehicles. Yeah, exactly. I've said it a million times. Tesla's dictating terms here, and the problem is, it's not possible for other companies to compete with Tesla on pricing unless, behind the scenes, from the business point of view, they're losing catastrophic, and I mean literally catastrophic amounts of money on every vehicle sold. These companies will need to not only somehow ramp to millions of vehicles per year in terms of production. In doing so, they'll also need to innovate in similar ways to Tesla and drive their costs down a comparable amount. But Tesla's not standing still. Again, Investor Day 2023, we saw a plan for them to halve the cost to produce a compelling electric vehicle. Tesla's costs are already probably 35, 40, 50% cheaper than many other companies producing EVs today. And now they've got another generation vehicle after that, a subsequent generation that's going to be 50% cheaper than this. The point I'm making, Tesla's not standing still. No matter how fast their so-called competition attempts to catch up, they're just not going to get there. The competition is not coming. The competition is being murdered. This is not Tesla's intent. They are not trying to start a price war. They are not trying to kill the competition. They are simply trying to make their products more affordable so more people can buy them. Again, per their 17-year-old master plan. As a side effect, as a consequence of Tesla continuing to drive down their costs and pass those cost savings on when wait times won't blow out, most automotive manufacturers will be going bankrupt this decade. Not because Tesla tried to put them out of business, but simply as a matter of executing against their plan. As a matter of course, Tesla inadvertently did put them out of business. Rest in fucking peace, the entire legacy automotive industry. And that includes EV startups. Tesla has started a price war between battery and internal combustion engine cars, and that battle has only just begun.
Not a surprise that we're seeing more price cuts from Tesla. We've already seen them in China and the U.S., their two largest markets. Now we are seeing them in other parts of the world. According to Reuters, they have decided to cut prices on the Model 3 and the Model Y in Europe. Germany in particular, 4.5 to 8% cut in the prices there. Singapore, a cut of between 4.3 and 5%. Remember, in terms of global EV sales, Tesla still leads the market. I get this question all the time from people saying, well, yeah, they lead here in the U.S., but what about around the world? Their strength in China, along with the U.S., helps them get 17% market share. There you see BYD nipping at their heels, particularly in China, but also expanding in Europe. And then VW and GM. As you take a look at shares of Tesla, keep in mind, we hear from them after the bell. Wednesday, that is when they report their Q1 results. Interesting to see whether or not they will say anything about how these price cuts might impact their guidance, though I don't think we're going to see them lower their guidance from the expectation of delivering 1.8 million vehicles this year.
A couple of things. First of all, a prediction with an extremely high level of confidence. Tesla won't be lowering their guidance, and I just want to take a moment here. It's amazing, the finance media in Wall Street. Tesla dangled a carrot. They literally put the number 1.8 million vehicles in their presentation just for the dimwits who don't know how to think and also will rely on anything Tesla says. In the same fucking earnings call, Tesla themselves said they're probably going to get to round 2, at least that's what they're aiming for, but here's a target of 1.8 for your Wall Street dingbats to focus on. It's embarrassing that Tesla needs to play this game, but play this game they do. The only thing that stops Tesla selling over 2 million vehicles this year is if they can't make enough of them. It's nothing to do with pricing, it's nothing to do with demand. If they make them, they will sell. The question is, can they produce 2 million vehicles this year? And this entirely hinges on the successful ramp of Berlin and Austin. If the ramps are off by a few months, it could make a major difference. We're talking tens, maybe even up to 100,000 vehicles either way. Tens of thousands, maybe even a couple of 100,000 vehicles, depending on how successful and fast the ramps happen. So it's a big unknown. But if things go smoothly, and they rarely do, but if they go smoothly, Tesla's likely to produce and deliver well over 2 million vehicles for the full year. But they've wisely told Wall Street, the number that you dingbats need to put in your spreadsheets, the number that you dingbats need to be focusing on is 1.8 million. We can't possibly miss that. Therefore, you're going to tell everybody that we beat deliveries at the end of the year, even though at the same time we said here's the 1.8 number and dangled the carrot, we also said we could probably do 2 million. Although in the interest of full disclosure, I do have an optimism bias. I tend to be very optimistic, always, and I hope I never change because people who are optimistic tend to overestimate things, but in the long run, they still seem to get a little bit more done and accomplish a little bit more than those who have a pessimism bias. So I'm owning that. I could be wrong. At the end of this year, people could be pointing and laughing, go, bro, they only did 1.71 million. You're a moron. How did you say that it'd be at least 1.8? But I'm happy to stand by that prediction and be held accountable for my predictions at the end of the year. So set a reminder. Let's see what happened. My best guess, they'll be closer to 2 than 1.8. And if things go smoothly, they'll probably crush 2. That is a big if though. ramping up 2 new factories simultaneously, lots of things can go wrong. And only one thing needs to go wrong.
Phil, I wonder, I thought of you because Adam Jonas of Morgan Stanley did a piece this week where he looked at the Norway market, which is, in their view, about a dozen years ahead of us in terms of EVs. And one of the arguments they made was that, Tesla's made a lot of inroads into a more mature environment, but those Chinese automakers also are making a stand.
You know, the Chinese automakers are extremely aggressive, obviously, in their home market, and they've got some advantages there in terms of incentives from the government. Then you look at what's happening in Europe. I've talked with people who are active within the auto market in Europe, and they make a point of saying, you would think that people would say, well, boy, I'm going to buy Tesla or I'm going to buy a European brand in terms of an electric vehicle, not a Chinese brand. If the price is low, those consumers are no different than anywhere else. And especially in the UK, that's where you're seeing the Chinese automakers become very aggressive, and it's impacting sales. They are picking up market share. Not a lot, but they are starting to pick up market share.
Absolutely, and as I and Sandy Munro and many others have predicted, the future vehicle market globally. Number 1, Tesla. Number 2, 3, 4, 7, 8, 9, 12, mostly Chinese automakers, and maybe, if you're lucky, 1 or 2 legacy automotive manufacturers somehow survive. To Phil's point, if the product's economical and it meets the needs of consumers, it will sell, irrespective of who's producing it. Loyalty to your home nation, pride in your locally manufactured vehicles will only go so far. Money talks. Again, going back to Tesla's mission. That's why they're trying to drive the cost of their vehicles down. So everyone who wants to buy a great vehicle looks at all the vehicles that are available, looks at the price of all the vehicles that are available, looks at the features of all the vehicles that are available and goes, do I have brain damage? No. Okay, I'm buying a Tesla. Now, to be fair, there will be a segment of the market where a lot of Chinese automotive manufacturers can get a little bit of a slice of the pie, and that's competing in the absolute arse end. The most affordable vehicles, potentially lacking a little bit in features and functionality, but just so much cheaper than anything else, including a Tesla, that some consumers who can't afford a Tesla, even if they're much cheaper, have no other option. Make no mistake, there will be an invasion of Chinese electric vehicles globally in the coming years. And these are the companies Tesla's so-called competition need to worry about. They've got no chance of catching Tesla. They may as well try and figure out if they can compete with the Chinese automotive manufacturers.
Now I'd like to bring back in Renita Young, and it's time to talk all things Tesla for our FOMO segment. So Renita, Tesla is, I would say, a network favorite. We probably have talked about this each already today, but it's a fun one, and there's always news to talk about with Tesla. And we are seeing shares actually hold on to their rally, up about 2%, but this is coming off of what had been a serious period of weakness for shares. I mean, we saw that reaction to its first quarter deliveries, down about 7%. Tesla needs some love right now.
You're absolutely right. So for the past 5 days, Tesla has lost about 11% of market share, and so or its value, I should say. And right now, it really does need what it has right now, a rally happening throughout the day. Hopefully, it'll stick for those Tesla bulls. But right now, it's also reacting off of those price cuts that the company made over the weekend. And the steepest price cut was about $5,000 to one of its U.S. models. And so I think this may be a norm here. Until Tesla achieves the number of deliveries that it desires, it may continue to cut its prices. There are some analysts, though, who believe that Tesla's reached its point whereby it will stop cutting prices. Baird said that Tesla's margins and macro uncertainty, they're now in focus, of course. Now, despite the second round of U.S. price cuts in this short time frame, Baird continues to believe that Tesla is going to be able to maintain being an industry leader in electric vehicles and in operating margins, and is also in the best position among its auto peers to be able to weather these economic headwinds that are here now and are to come. So that's why Baird maintains an outperform rating and a $252 price target on Tesla shares, which still represents around a 30% move to the upside of where it's trading today.
Yeah, I mean, that's still a pretty optimistic price target on a stock that's trading at around $187. And this is even considering the fact that shares are up, pretty significantly on the year now, 51%.
I just want to take a quick moment here just to point out some, let's say, less than optimal reasoning. What happened yesterday or last week or last month or last year to a stock doesn't matter at all. It doesn't fucking matter. It's completely irrelevant. What matters is where to from here. It doesn't matter if a stock's up 50%, especially if it was down 80% not that long ago. It doesn't matter if a stock's up 2% or it's down 75%. It's irrelevant. It has no predictive power of what the stock's going to do in the future. Now, at some point, over a long enough time frame, I suspect that Tesla's going to go way beyond its previous all-time highs. But when? I don't know. And what it's at now, or where it was previously, doesn't really enter the picture. Have you guys, girls, ever played roulette at a casino? You'll note they show recent numbers that have been spun on the roulette table. A big history. Here's all the numbers that have come up recently. This is to play a trick, a little bit of psychological magic in terms of the minds of people that don't understand how the world works. Some people might see that reds come up over and over and over and over again. Out of the last 10 spins, 8 of them are red. They might think to themselves, well, surely black's got to come up then. Red can't keep happening. There's been so much red. These people erroneously think the probability of red occurring is lower because it's occurred so many times previously. Each spin is a new spin. What's already happened does not matter. It's important to understand this because it can be very easy to trick yourself into thinking, oh, well, the stock's already up 50% this year. The stock's up 80%. It can't possibly go any higher. That's a poor way to think. Instead, you've got to look at what the company's doing and try to figure out, does this make sense? Is this fair value? Is it not fair value? When will the stock market figure out it's not fair value? I hope you guys get the point. Oh, by the way, just to show how dumb people are, the same person looking at the roulette numbers, seeing reds come up 7 out of the last 10 times, thinking, oh, black's got to come. There'll be another person who sees red and go, oh, red's on fire. It's obviously going to be red again. Look, it keeps coming up red. I'm going to go red. Madness.
Up 83% off their 52-week low. Now down 45% over the last 12 months. And I think that is the narrative that seems to be overshadowing the fact that we have seen this nice recovery, because as you can see there on a 12-month chart, we haven't really been able to get back to where we once were. And it feels like every time there's a breakout in this name, we're then hit with some more resistance. But I was actually reading notes from both Citigroup as well as Bernstein, who did say on Monday that Tesla's price cuts put an even greater emphasis on their first quarter margins. So whereas like Meta's keyword right now is efficiency, I feel like Tesla's is all things margins going into this first quarter report, which is expected next Wednesday after the closing bell. So that's another one that's coming up rather quickly. But they said these price cuts are unlikely to last, like you said. So there is some agreement there among the analyst community, but that they do see this being a concern while they report, because as we know, it seems like Tesla can put up great numbers and it's never good enough for the street. Like we saw first quarter.
She is so right. Tesla literally can't do anything right when it comes to Wall Street. No matter what they do, never good enough. Now, one thing I'd like to discuss before it takes place. If margins are a little bit lower than analysts are expecting, it's the end of the fucking world. The story's over. The growth story is over. The margin story over. The profitability story is over. Tesla's massively overvalued. The multiple is too high. You should own Tesla stock. Now, I'm not saying that margins will be lower than Wall Street's expecting. I'm just saying if they are, Wall Street, short time perspective, will lose their fucking minds, failing to understand the big picture. There'll be periods of time where Tesla's price cuts are in line with their cost declines. There'll be periods of time where they cut prices a little bit ahead of their cost declines, and there'll be periods of time where the price cuts lag their cost declines. Sometimes margins will be much better than people are expecting in a quarter because Tesla's costs came down a lot, yet they didn't need to cut prices. There'll be other quarters where Tesla cut prices a little bit more aggressively to sell through production, not because there's no demand, but because it's better to sell these vehicles today at a slightly lower margin than have them sitting around for 3 months until consumers end up buying them. So what I'm trying to say is, unless Tesla blows everyone away and the margins are basically the same as last quarter, which would be stunning, possible, very unlikely, but possible, I would expect a fairly negative, massive overreaction from Wall Street, who for some reason continue to forget that Tesla is actually able to, and has been for the last decade and a half, reducing their cost to produce vehicles, and that's why they can continue cutting prices. I mean, if you want to go fact check me, look at how much the original Model S cost, and look at its specs, look at it today. And we saw earlier in this video the pricing on the Model 3 and the Model Y. I think Tesla in the Investor Day 2023 presentation mentioned that their cost to produce Model 3 has fallen 30% since it began production.
They did exceed what street analysts had been expecting. We still saw shares down almost 6%. So that's, I think, significant. And we are seeing somewhat of a mixed picture going into this first quarter report. As always, Alex always says this, but this is one of the most polarizing names I feel like that we cover, because the bears are very loud, the bulls are very loud. They both are very, very strong in their conviction. But this Bernstein analyst said these price cuts do reflect Tesla's need to stimulate demand and are an explicit trade-off of margins for volume. I thought that was really interesting. He said that while many investors have been hopeful that first quarter margins might bottom here, they don't now necessarily believe that will be the case, particularly given their belief that further cuts are likely. So he actually goes sort of against the Baird and Citi analysts. Now, CEO Elon Musk did say in late January that orders were twice Tesla's production capacity after those price cuts in early January. I think, though, the fact that we've continued to see further reductions in price since January don't necessarily mean demand can be doing too hot. I mean, and it's wild to me, actually. I was saying this is polarizing, but of the analysts covering this name, there's still so much upside. The average analyst price target does imply about 25% upside from where we're currently trading. And this is one of the highest buy rating ratios in the S&P 500 of all the stocks. So this name does still skew very positively despite some of the near-term volatility. And I think that's the mismatch, is how does Tesla's valuation stack up to the actual narrative?
I think I have two comments about that, right? So first, we have Tesla, that it's undisputable that it is a leader in this space, right? But then we have this continued demand production issue, right? Whereby Elon Musk suggests that, hey, we don't have a demand issue, we have a production issue. And these price cuts, this series of price cuts, both here and abroad, have proven that they're trying to stimulate more and more demand. But how much longer will Tesla continue to do this is the question.
The answer to this is Tesla will continue to cut prices indefinitely. It's in their fucking master plan. The thing that a lot of people are unaware of, and I don't want to be too obnoxious here, because a lot of people just don't know. They're not dumb, they're just ill-informed, but they say things that end up sounding really fucking dumb. Everyone seems to be under the impression that Tesla doesn't have any ways to actually reduce the cost to produce their vehicles. They don't understand that electric vehicles, when you go down to the atoms and think from first principles, there's so few moving parts, so few things that need to go in an electric vehicle compared to an ICE vehicle, that if you knew nothing else, you'd realize that over the course of time, as these things begin to be produced in volumes of tens of millions and then eventually hundreds of millions, give or take, in a single year, there'll be endless innovation in terms of manufacturing these things. It's still a new technology. It takes a very long time for technology being manufactured at scale to mature, for lots of the innovation to squeeze the juice, so to speak. There's so much innovation still to come. Again, I referenced Tesla's Investor Day 2023. They've developed a new manufacturing system for electric vehicles to literally halve the cost. You can't do that with ICE vehicles. They're a mature technology. We're not seeing the same level of innovation in ICE vehicles. Most of the reason for that is because most of this innovation has already occurred. ICE vehicles have been produced at scale for over a century. Now, it's true, there are some innovations that Tesla's come up with that could have been done in terms of ICE vehicles, but haven't. Why? Well, Tesla has big brains and they use them, whereas most automotive manufacturers are just cruise control. Don't rock the boat, just keep doing things the same way we've been doing them. This is why people like Sandy Munro, who previously worked at Ford, got fed up and started his own fucking business because the morons at Ford didn't want to rock the boat. Didn't want to do anything innovative. Tesla's different. But key to understanding Tesla's strategy is to understand that there is so much cost they can take out of producing electric vehicles. They're just getting started. I've said this before, I'll say it again. Per my Tesla valuation model, available exclusively on Patreon, you can see my estimates for Tesla's base price of all of the different models over the next decade, including stuff they haven't even announced yet, but it's obvious that will come. If you've got access to my valuation model, have a look now. Scroll down on the assumptions over the next decade and look at my long-term vehicle lineup, ASP, and annual sales potential. I've got a generation of vehicle that Tesla will be producing and selling to customers this decade with a base price of $18,000 US, meaning it'll be produced for around $12,500, and it'll be comparable to today's Model Y or 3. I sound insane when I say this to people that don't understand the amount of cost that can be taken out of producing an electric vehicle. What the f*** are you talking about, you moron? How's that possible? Believe me, it's not only possible, but it will come to pass. This is the thing people are not understanding.
Teslas can't keep cutting prices, the margins are collapsing. Why don't they just advertise so that they can have a higher margin?
Bruh, they're going to be able to produce a compelling electric vehicle in the future for about a third the cost it is today, maybe less. And they'll be able to sell them with comparable margins to today. My best guess is Tesla's gross automotive margins at the end of this decade, give or take, will be somewhere in the 30% range. Could be as high as 35, 40, could be as low as 27, 28. But people in their minds right now are thinking, oh my God, the only way Tesla can sell so many vehicles is they got margins the same as Toyota and Ford and General Motors. It should go without saying, but apparently not, just so you guys understand. Tesla can't advertise their way to people being able to afford their vehicles. Tesla running ads does not reduce Tesla's cost to produce a vehicle. They may for a short term be able to sell some vehicles for a slightly higher profit margin, but that never gets them to the mass market. Instead of Tesla wasting money advertising to consumers, instead, they can focus their energies driving their costs down. And as a result of driving their costs down, more consumers can afford to buy their vehicles, and spoiler alert, more consumers will buy their vehicles. And of course, there's also an argument, a little bit of a tangent here on advertising. Most consumers today don't know shit about electric vehicles. They don't understand they're much cheaper to own and operate. They're much safer by default. They perform better by default. I acknowledge this. But remember, Tesla's still selling all the vehicles they make as they continue to execute on their plan. And here's my thesis. You may have heard me say, the more Teslas Tesla sells, the more Teslas Tesla sells. Why? Because every person who takes delivery of a Tesla vehicle, they start ranting and raving to their friends and family and espousing the benefits, Man, check out my Tesla. I'll give you a test drive. It's sick. Check out the 0 to 60. Oh my God, that's sick. By the way, did you know they're really safe? Oh, by the way, do you know they're really cheap to own and operate? I didn't know that. Thanks for telling me, bro. I might buy one. Did you know you could buy it online in a few seconds? Look, here's your phone. Next minute, they bought a Tesla. Then that person takes delivery and tells a few friends as well. This is my hypothesis. Tesla won't need to advertise, at least not for a long time. Because every time Tesla sells a vehicle, 1 or 2 or 3 or 4 consumers who didn't know anything about a Tesla or electric vehicles learn as a result of their friend, family member or colleague ranting and raving about the product. This is something that people just don't seem to understand.
David, nobody understands anything about electric vehicles, therefore Tesla needs to advertise.
Now, look, I could be wrong, but I don't think I will be. I think the best strategy for companies like Tesla and others is to post information online, on Twitter, on YouTube, on their website, explaining the facts to consumers who are doing their homework, which is a minority of consumers. But the consumers that normally you try to advertise to instead will probably hear the benefits, the perks, and the upsides of owning electric vehicles from people that they know personally who end up buying an electric vehicle. Time will tell, but that's my theory. The more Teslas Tesla sells, the more Teslas Tesla sells without advertising. There's a lot of moving parts here, but it's quite a simple concept. More Tesla vehicles in customer hands means more customers ranting and raving and espousing the benefits of an electric vehicle to their friends and family, informing them. Rather than Tesla having to run ads, people who buy the products will rant and rave about them because they're so fucking good. It's a pretty simple strategy. So far it seems to be working. I mean, how the fuck did Tesla already sell a few million vehicles, getting close to 4 million vehicles sold to date? How'd they sell 4 million vehicles without any advertising? I am asking a question. I do expect an answer. How did they do that? The answer is word of mouth. They managed to sell 4 million vehicles already without any advertising. And before Tesla began producing electric vehicles, nobody knew about any compelling electric vehicles or the benefits because there weren't any. Suddenly, Tesla produces a product that has all these benefits. And still today, hardly any people know about the benefits, yet they've sold every vehicle they made along the way because of word of mouth. God damn, that was a long rant.
And how much more important will Tesla continue to make deliveries rather than margins? That's one big question. Which one do you sacrifice for the other? The success of the company does sort of hinge on its ability to deliver more cars, but it's chipping away at margins in some ways. That's what some investors, or some analysts, I should say, are saying.
And I guess my thinking on this margin, the negativity around the margin narrative going into their earnings is, what company isn't having their margins hit right now? I mean, that's the case in retail. That's the case in grocery store chains like Albertsons that reported this morning. I mean, that's really the case across the board with anyone that sells any sort of consumer product. So why do we think Tesla's, able to sort of come out unscathed? I think, of course, we'll see their margins affected by these price cuts, right?
Of course. But I feel like part of the run up to this is the high expectation that Tesla sets for itself. And people may be feeding off of that a little bit. So if you say you're going to reach a certain level of deliveries and you don't, then people are asking why. Analysts are asking why. That's probably why they're really hard on this particular stock when it comes to that. But then we have so many bulls that are so positive on the stock, and no matter what happens with it, no matter what the price action is throughout a particular day, they're still rooting for this stock.
I mean, I've got to say, anyone with a long-term perspective looking at Tesla, the company, not the stock, but the company, it's hard not to be extremely bullish. Now, full disclosure, my estimate for Tesla gross automotive margins at the end of this decade, in the bear case, are 20%, in the bull case, are 40%, in the base case, 36%. My reasoning is quite simple. Costs come down, Tesla won't need to drive the cost down as far as they could, hence very healthy automotive margins. I could be wrong, but I'm probably less wrong than most on Wall Street. You think in order for Tesla to sell 20 million vehicles a year, actually they don't even think that's possible. Most of them at best, you're talking 6 to maybe 10 million. They're thinking Tesla's margin is going to be like 7-8%. They're going to be in for a rude shock. Speaking of rude shocks, if you'd like to be rudely shocked by how much energy you can have and how good you could possibly feel, check out Athletic Greens AG1. Most of you will know now, I've been taking this stuff for more than 2 years. I absolutely swear by it. 1 scoop, once a day, every day. And it's had a profound impact on how I feel, perform, and show up. That's the reason I continue to bang the drum on this. There's a lot of upside to feeling and performing your best, and very little downside, if any. An impeccable diet will only get you so far. AG1 is packed full of 75 high-quality vitamins, minerals, and whole food source nutrients. And in addition to that, it has digestive enzymes, prebiotics, probiotics, and adaptogens to help you deal with stress. Promotes gut health, boosts immunity, and meaningfully increases energy, at least in my experience and that of almost every single person who's tried it. Plus, if you head to athleticgreens.com/SMR or use the link in the pinned comment, you get a 1-year free supply of vitamin D3 and K2, and you'll be well on your way to feeling and performing your best. No need to take my word for it. Here's what some of you guys and girls have to say. I see comments all over YouTube and Patreon and Twitter. Here's a DM I received a few weeks ago. Hey, thanks for the great content. Just ordered AG1 using a link. I hope that once I start drinking it, I'll be just as cool as you. Very low bar, my friend. I responded, let me know how you're feeling in a few weeks, and sure enough, I got a follow-up DM today. I feel like I have a lot more energy since I started on AG1. Thanks for the recommendation. Simple, straightforward. Take a moment to think, could you do with more energy? Maybe the answer is no, but I think in most people's cases, probably yes. More energy, you get more done, move your body more, exercise more, get through the day a little bit easier. I think one way to describe Athletic Greens AG1 from my own experience has been like turning the difficulty level on life down just 1 or 2 notches. More energy means everything's easier, you've got more capacity to do what you need to get done. On screen now, a bunch more testimonials. If you guys want to read them all in detail, go for it. But there are a lot of recurring themes here. More energy, more motivation, more exercise capacity, better recovery from exercise, positive impact on mood, sometimes even cognition. Some people finding it's improving their sleep. Others finding some assistance with long-standing health issues. And interestingly, and no doubt due to the adaptogens to help you deal with stress, a lot of people are mentioning that they're seeing a reduction in anxiety, including the example on screen now. Female viewers saying it's helping alleviate some of the symptoms of their period and meaningfully increasing libido. Many folks feeling more motivated, more ambitious, more driven, getting more done, more switched on at work. Improved mental game, reduced social anxiety, not just overall anxiety. And I think this one on screen right now really sums up my own experience. This person leaving some feedback, despite turning 40 years old in June, they're now feeling like they're in their mid-20s. And this sums up my experience precisely. I literally feel like I'm 20 years old again. I don't look it, but I really do feel it. So what are you waiting for? Head to athleticgreens.com/SMR or click the link to the pinned comment. Start your daily health habit now. And please, I really like to know how you're feeling in a few weeks' time. The reason I ask is I'm trying to have a positive impact here, and I like to solicit feedback. Know I'm doing some good. That's the reason I continue to bang the drum on this stuff. And here's an interesting fact you guys and girls may not be aware of. Despite my relentlessly promoting this stuff now for 3.5 months, day after day after day after day, the number of people trying Athletic Greens AG1 using my link is increasing over time. I think I'm finally getting through to some of the long-term skeptics. Day after day, chipping away, just trying to help you guys and girls feel better. Seems to be working. So click the link in the pinned comment or head to athleticgreens.com/SMR. Let me know how you're feeling in a few weeks' time. And don't forget, if you'd like to see the follow-up to the spiciest and most important video I've ever posted on Patreon, that went live yesterday. If you're not a member, you can join Patreon with the card in the corner or the link in the pinned comment, and I'll see you over there. Love ya.